And welcome back. I'm really excited to share today's video because the National Association of Realtors just announced a huge decrease in pending home sales for the month of November. They actually just announced this today, which is the 28th of December here. So I'm going to go over that report in today's video. I'm also going to discuss a lot of other leading indicators of home buying demand, what is happening right now in our U.S. housing market that could impact our housing market in the next coming months here. So I have a lot to share in today's video. Let's go ahead and dive right in. This again is according to the National Association of Realtors. They just posted this on the 20th of December here. So they say here, pending home sales slid for the 6th consecutive month in November. All 4 U.S. regions recorded month-over-month decreases. So here's how they break up the nation as a whole. They break it into 4 major regions here: the Midwest, the Northeast, the South, and then the West. Let me actually see if I can zoom in. Wow, that's way too much. Anyways, let's have a look at this. So on a month-over-month basis, all 4 major regions recorded decreases in their pending home sale index, which of course is a measure of contracts being signed between buyers and sellers. So in the Midwest, pending home sales decreased on a month-to-month basis by 6.6%. In the Northeast, it declined by 7.9%. The South declined by 2.3%, and the West only fell by 0.9% compared to October 2022. So every single region here recorded decreases on a month-over-month basis here, but also all 4 regions saw year-over-year declines in transactions as well. So again, we're not talking about just one region where we saw a huge decrease in pending home sales. We're seeing that across the United States on a month-over-month basis as well as on a year-over-year basis as well. And check this out because this is pretty crazy. I'm actually applauding the National Association of Realtors for actually mentioning this because actually before this report was updated here, I was actually kind of wondering if they're going to be actually mentioning this. So it's actually a little bit worse than what he says here, though. The National Association of Realtors chief economist Lawrence Yun had this to say: pending home sales recorded the 2nd lowest monthly reading in 20 years as interest rates, which climbed at one of the fastest paces on record this year, dramatically cut into the number of contract signings in order to buy a house. In other words, a huge decrease in pending home sales due to the rapid pace of home prices, of course, and of course, mortgage rates as well. So here's what he means by that, because right now their index is at 73.9. That's a 4% decrease compared to October, and also a whopping 37.8% decrease compared to 1 year ago. We also saw huge decreases for each of these 4 major regions compared to a year ago as well. Look at this. The Northeast falling by 34.9%. Midwest falling by almost 32%. The South decreasing by 38.5%. And look at the West falling by 45.7% compared to November 2021. And by the way, this is based on their pending home sale index, or their PHSI, which is a forward-looking indicator of home sales based on contract signings. Therefore, this is a leading indicator of our housing market. Basically, this more or less leads to closed home sales in the next coming months here. So a couple of things I want to mention regarding this table right here, and then I'm going to be sharing my own analysis regarding their data here, and wait for that because it's pretty wild. Wild. An Excel spreadsheet that's wild, right? I don't know. I get really excited by making these analysis based on data from other companies here and sharing my perspective, which I'm guessing you probably won't get this perspective anywhere else. We'll see. Anyways, so for November, the index was 73.9. 1 year ago, that index was 118.8. By the way, the higher the number of pending home sales. So this huge decrease of 37.8% is something we should be following here. Also at 73.9 right now, this is well below the yearly numbers we saw back in 2019 through 2021 when the index was actually over 105 for each of those years. But this shouldn't be your biggest takeaway from today's video though, because this 37.8% decrease compared to 1 year ago is a huge decrease historically speaking here. So here's a data I pulled from the National Association of Realtors website here, which is these 2 columns right here. And by the way, I am a member of the National Association of Realtors. Actually, they granted me permission to share these updates with you guys back in September this year. If you guys want access to this information, it's going to cost you about $1,500 if you're not a member of the National Association of Realtors here. So hope you guys get a lot of value out of this. Anyways, so look at this, 73.9. That's their current reading for their PHSI, which is a measure of contract signings between buyers and sellers. So at 73.9, this is actually the 6th consecutive monthly decrease. So their index has been declining ever since June of this year. But wait, there's more, because excluding the onset of COVID back in April 2020, when their index was 71.6, the current reading right now at 73.9 is an all-time record low for data that goes back to January of 2021. So taking a step back here, the current reading right now based on contract signings between buyers and sellers is at an all-time record low going back to January 2001. If you exclude April 2020, where we had stay-at-home orders across much of the country. Now, here's what I mean by that, because at 73.9, back in April 2020, the index was 71.6. So excluding that single month, we haven't had a reading below 73.9 as far back as the data goes, which is January of 2001. But wait, there's more, because I actually added this column for today's video, and actually we're looking at year-over-year changes in their index. So for November, again, a decrease by 38%. And also by my analysis right here, this 38% decrease on a year-over-year basis is the biggest year-over-year decline on record as well. So when comparing November of 2021 compared to November of this year, that's a 38% decrease. When looking at the yearly changes going back to January 2001, this is actually the biggest year-over-year decline on record as well. In fact, that's even a bigger decline we saw back in April 2020, because during that time, their index actually decreased by 33% compared to April 2019. So taking a step back here, the current reading at 73.9 is at an all-time record low as far back as the data goes back to January 2001, when excluding April 2020. On top of that, the 38% decrease that we saw on a yearly basis here is also the biggest decline on record as well. To me, this is very telling, because clearly home buying demand is decreasing big time, given the fact we have approximately 60% more houses listed for sale right now compared to 1 year ago. That's based on data from altosresearch.com as well as realtor.com. If we had an increase, or if we still had a high amount of demand, and we have an increase of housing inventory by about 60%, one would assume that pending home sales would be increasing big time. But we're seeing just the opposite, though, because this huge decrease in pending home sales is actually really increasing housing inventory as it's taking longer for houses to sell. And also we're seeing fewer contracts being signed between buyers and sellers. In any case, hope you guys appreciate that analysis that's not mentioned in this press release from the National Association of Realtors here. So let's go ahead and move on. They also said here, according to Lawrence Yun, again, who is the chief economist for the National Association of Realtors, he says here, with mortgage rates falling throughout December, home buying activity should inevitably rebound in the coming months and help economic growth. It actually depends on what source you're talking about, though, because when looking at Freddie Mac's weekly survey based on average rates across the United States regarding mortgage rates, that actually has been decreasing. So look at this. Here are average rates according to Freddie Mac on a weekly basis here. So for the week ended December 8th, rates decreased by 16 percentage points. Then the following week, they decreased to 6.31% from 6.33%, and then decreased again to 6.27% as of December 22nd. However, though, when looking at daily rates have actually been increasing. So look at this. And this is according to the Mortgage News Daily, which is based on daily average rates for people with exceptional credit, whereas Freddie Mac looks at weekly surveys here. So ever since December 15th, rates have been increasing on a daily basis according to the Mortgage News Daily. So rates really bottomed out for the month at 6.13% on December 15th. But ever since then, rates have been more or less increasing. And in fact, as of today, which is December 28th, rates have increased to 6.54%, up from 6.13%. So when Lawrence Yun says that mortgage rates have been falling throughout December, and that's going to increase home buying activity in the next coming months, it depends on what you're talking about here, because when looking at Freddie Mac, rates have been decreasing, but that's based on a weekly survey. However, looking on a daily rate though, or daily update for rates have actually been increasing since mid-December. On top of that, it's anyone's guess to see what's going to be happening with home buying demand in the weeks and months ahead. Given the fact there's a lot of factors that affect our housing market. So I actually do not agree with him regarding this, regarding that we're going to see an increase in home buying activity. In my personal opinion, it's going to be really, really telling to see what's going to happen to a housing market once we hit the spring home buying season. If home buying demand decreases big time, let's just say February through April of next year, that's going to be very, very telling. In contrast, though, if home buying activity does increase in the spring months like it normally does, that's also going to be very telling as well. And of course, I'll definitely keep you posted with the latest developments. Okay, let's change gears again and talk about some more leading indicators of home buying demand. Here's a report I have not shared with you guys. This is based on a report from the Mortgage Bankers Association, or the MBA. This is a report based on applications for brand new home purchases for people using loans in order to buy brand new houses. So mortgage applications for new home purchases decreased by 25.2% compared to 1 year ago. So we're seeing a huge decrease in the number of people who are submitting applications for mortgages in order to buy brand new houses as of November. Compared to October 2022, though, applications increased by 1%. And according to Joel Kahn, who's the MBA's vice president and deputy chief economist, he had this to say: new home purchase applications recovered slightly in November as mortgage rates retreated from their October highs and brought some prospective buyers back into the marketplace that still faces affordability challenges. However, both applications and sales remained over 20% below last year's pace. Here's something I also found very interesting as well, because Joel Kahn also said, reflecting the slowdown at the upper end of the market, the average loan size on new home purchases or new home purchase applications was $392,465, the lowest since June of 2021. And by the way, by product type, for people applying for loans in order to buy brand new houses, approximately 76.6% of those loan applications were from conventional loans. FHA made up about 21.3% of those applications, and USDA loans composed only 0.2%, and also VA loans only made up about 10.9% of all applications received in November for brand new home purchases. And because we saw a 25% decrease in applications in order to buy brand new houses as of November, this could imply a decrease in home sales for brand new home sales in the next month or so. Here's something else I also want to share with you guys as well, because here's a look at real estate showings across North America according to Showing Time. So for the week ended December 27th, average home showings across the United States, or actually across North America, decreased by 68.6% compared to the first week of 2022. Back in 2021, home showings decreased by 58.7% compared to the start of the year that year. Also in 2020, home showings decreased by 51.2% compared to the first week of 2020. As you can see, of course, we saw a huge decrease of home showings across North America during the holiday period here, of course. So entirely normal to see this huge decrease, declining by over 50% compared to the start of each of these years. But again, it's worth mentioning yet again that home showings have been more or less declining ever since mid-July. So we've been seeing fewer real estate showings across North America compared to the first week of 2022 ever since mid-July of this year. And lastly, to give you guys an update regarding mortgage rates, Investopedia.com as of today, which is December 28th, is reporting that average 30-year fixed rate mortgages is at 6.95%. Compare this to the Mortgage News Daily, they're reporting average rates at 6.54%. That's a 4 basis point increase compared to yesterday. And at 6.54% right now, by the way, this is average rates for people with exceptional credit, of course. This is much lower than the 12-month high at 7.37% that we saw back in late October this year. Also much higher than the 12-month low, though, at 3.24%. Also compared to 1 year ago, rates have increased approximately 3.3 percentage points, because 1 year ago, rates averaged 3.24%. Now they're averaging at just over 6.5%. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. And of course, appreciate you. Hope you guys have an awesome day. I look forward to seeing you on the next video.